Hey everyone, I'm Sunny and I'm the founder of StockSmarty. I built this tool because I was doing something a lot of investors will recognize. I had a spreadsheet, a massive, increasingly painful spreadsheet that every few weeks or months I'd sit down, pull up the holdings of half a dozen ETFs, some passive trackers like the S&P 500, some actively managed funds, and manually cross-reference which stock appeared across all of them. Then I'd weigh each one by how heavily each fund held it, work out which holdings had shifted since last time, and updated my portfolio to match. The logic was simple, right? If a stock has shown up in multiple ETF, different strategies, different selection criteria, and it's heavily weighted across all of them, that's about as strong as the signals you can get without paying for an analytic research. A stock that's the top 10 in 5 different funds counts much more than one position number 487 in just one. It's not one fund manager's opinion, it's a consensus drawn from how trillions of pounds of real capital is actually allocated. Whether you want to build a long-term dividend portfolio, find solid blue chip stock the major funds all agree on, or just sanity check the names you've been thinking about buying, that consensus system was incredibly useful. But maintaining that spreadsheet was a nightmare for me. ETF holdings change, companies cut dividends, new stocks appear, old ones drop out. Every rebalance took ages, and I'd inevitably end up with inconsistent data somewhere. So I built StockSmarty to do exactly what my spreadsheet was doing, but properly. You build a portfolio once based on the ETFs you trust, and every few weeks or months you hit the rebalance of StockSmarty reruns the analysis against today's ETF holdings. It shows you exactly what's changed and saves the new version with your full history preserved. Every version, every change, every allocation, and you can tweak your portfolio whenever you want. Add stocks, remove stocks, adjust allocation. There's an AI analytics tool that gives you a proper review of what you built, and a forecast tool that predicts how it'll grow over time. Let me show you how it works. So this is the homepage, and pretty simple, explains what StockSmarty does, who's it for, and what you get with the free plan, which is just down here. The free plan is genuinely free. You get free portfolio analysis, 3 rebalances, and 3 AI portfolio reviews in your first 30 days, no credit card needed. After that, you keep 1 analysis and 1 rebalance every 30 days forever, so you can always come back and refresh your portfolio. So let's jump straight in. I'm already signed in, so let me walk you through the actual tool. This is where every new portfolio starts. You pick the ETFs you want StockSmarty to look inside. You can search by name or ticker, so if I type in, I don't know, SCHD, that's the Schwab's US Dividend Equity ETF, one of the most popular. I'll add a couple more, maybe VHYL for global exposure, VIG for dividend growth, maybe QQQ, ISF, and maybe a couple of others. The reason you want a mix of different ETFs is that the more diverse your selection, the more meaningful the consensus signal becomes. If a stock appears in a quality focused fund, a yield focused fund, and a growth focused fund, that's one stronger than if it just appears in 3 near identical S&P 500 trackers. The sweet spot is usually between 3 and 7 ETFs. Now, over here you have your settings. You can set a minimum dividend yield. I'll just leave it at 2% for now, which filters out the really low dividend stocks. You can set your investment amount, let's say £10,000, and choose a scoring methodology. Method A is a conservative approach, which heavily favours stocks that appear across many of your ETFs. Method B is more balanced. Most people stick with Method A because the whole point of cross-referencing is to find broad consensus. Once you're happy, you can hit Analyse. And this is where the magic happens. At the top, we've got a general overview of your search. So we've got the number of stocks it returns. We've got the allocation, which will always be 100%. We've got the average dividend yield of the portfolio. The number of unique stocks it found across all 7 ETFs. The number of backup stocks we'll go into in a minute. The amount you would get as a return on your investment if you invested £10,000 into stock per annum, and the amount per month. The highest yield in this portfolio, the average score which we'll get into, and how many sectors it covers. In terms of sector breakdown, we've got a useful little pie chart here which tells you the allocation against different sectors. So what we have is 2 tables. The top table is your qualified portfolio. These are the stocks that met your criteria, like your minimum dividend yield. They are scored by how consistently they appear across your selected ETFs and how heavily each fund weights them. And the percentage is always summed to exactly 100%, ready to copy directly into your broker. For example, we've got United Health at the top. It appeared in 5 out of 7 ETFs. The dividend yield is above the 2% criteria we sought for, so therefore it gets a relatively high score and appears towards the top of this list. As we go down, you can see the frequency of stocks that appeared in the ETFs. Again, they're dividend portfolios, and they evidently receive a lower score because they appear in less and they are less weighted. At the bottom, we've got our backup stocks. So these are the ones that pass the dividend yield criteria. So like British Tobacco, sort of 5.04% dividend yield. It only appeared in one ETF, so therefore there's no consensus for us to add that into our portfolio if it only appeared in one ETF. These are not in your portfolio by default, but they're there so you can swap them in if you like. Useful if your top portfolio ends up too concentrated in one sector and you want to manually diverse. For example, if I did want to add this into my portfolio top, I simply click the add button. Each stock has a small info icon. Click it and a panel appears at the side showing you everything: current price, dividend yield, payout ratio, our 7-factor safety score, sector, dividend history, the works. The safety score gives you a quick read on whether the dividend looks sustainable. You're also able to add any stock to your portfolio you want, which may fall outside the ETF criteria. For example, if we click add, we get a selection of stocks here. If I search for Apple, then again I can choose Apple. And I have the option to add it to my portfolio. So this was found in 4 out of the 7 ETFs we asked to analyse. However, because the dividend score was so low, it didn't appear in our analysis summaries. So therefore, if we want to add it manually, we can. I press add, and now Apple is now added. So it gets a score if it's found in our existing dividend portfolio. So then in this case, it appeared in 4 out of 7 ETFs. But the dividend score was low, meaning it gets a lower overall score allocation, even though we all know that Apple is a relatively strong performer. At the same time, if you wanted to remove a stock, as for example you haven't got any faith in Johnson & Johnson, you can do so, click remove, and it will do so. If you want to remove multiple stocks, you can select one or more, and then we have the option to remove selected stocks up here. You will notice that some stocks are highlighted in yellow, like the one we added, Apple, and the one we added from our backup portfolio, British American Tobacco. That's the tool flagging that this stock has been manually changed by you, either added, removed, or has its allocation adjusted. This is a visual reminder that you've stepped in and overridden the algorithm. The yellow stays with your stock, so you always know what's been customized versus what comes straight from the analysis. Again, I have the option to change the allocation if I wish. So if I override this allocation for unit specific from 2 to 4%, it will highlight in yellow. It will tell me it was manually adjusted and gives me the option to revert back to the algorithm generated allocation. When you're happy with your portfolio, you can go up to the top, you can save, you can give your portfolio name, it gives it a default, but you can change that to my new portfolio and click save. This becomes version 1. From now on, you don't need to start from scratch, you just rebalance the portfolio as the underlying ETF. So now we're on our portfolios page. So within our portfolios page, we can see all the portfolios that we have saved over time, including the most recent one, which we have here. You'll see numerous things on the face card for the portfolio. You've got the number of stocks, its average dividend yield, its yield on cost, any increase or decrease since inception, along with the ETFs which are contained within this portfolio. It's good for a quick glance to see how things are getting on. When I click view, I get the full breakdown, and here's the thing: every time you rebalance, StockSmarty saves a new version. So at the moment we just have version 1. You never lose history, so you can scroll back and see exactly what your portfolio looked like in version 1, version 2, version 3, and what changed in between each roll. Each version shows the stocks and their prices at a certain point in time against the current price. Obviously it shows your stock. You still click the I button and see the detail behind each stock. You can see in yellow what was manually added or adjusted. We also have the dividend calendar. It shows the next 12 months of ex-div data and payment data across every stock in your portfolio with the status pills. Really useful for seeing when income is coming in. Below that, there's a portfolio news section. Click the plus to expand it, and StockSmarty pulls the latest news articles for every stock in your portfolio, sourced in real time, and lists them with a sentiment tags. So you can see at a glance whether the coverage is broadly positive, negative, or neutral. There's also an AI summary at the top that reads across all articles and pulls out the key themes from your holdings right now. It's available on Pro and Unlimited plans, and it's generally a fast way to stay up to date on what's happening with the companies you own without having to go and search for each one individually. There is also an AI portfolio analysis here. This uses AI to actually look at your portfolio and give you a proper review. Strengths, concentration risks, sector diversification, suggestions for what you might want to add or remove. It's not investment advice, nothing on StockSmarty is, but it's generally useful sanity check from a tool that's looking at your portfolio holistically. You can export the current version to CSV if you want the raw data, or to a PDF if you want a nice broad summary you can save or share. What we can do now is hit the rebalance button. StockSmarty reruns the analysis using the same ETF and settings as your original portfolio against today's ETFs holdings. Now you'll notice this rebalance has come back identical to what I had before. This is because I'm running this rebalance on the same day I created the portfolio. None of the ETFs have updated their holdings in the meantime. In real life you'd be rebalancing every few weeks or months and you'd see the actual changes. This is actually a good sign. It tells you that the tool is being honest. It's not just shuffling stocks around to look busy. If nothing's changed in the underlying data, your portfolio doesn't need to change either. So let me show you what it looks like when they are changing. I'm going to manually delete a couple of stocks that simulates what would happen if the company had dropped out of the ETFs. Here's the comparison table on the left hand side. We can see that I removed Procter & Gamble and the Home Depot. So if they didn't appear in the next rebalance, then you'd be able to see quite clearly against version 1 which stocks have been removed and which stocks remain. You'll also notice that any stocks highlighted in yellow are the custom changes that have been pulled through from the previous version. So because we added Apple in the previous version, although it wouldn't appear in the rebalance, it's now been added into our V2 portfolio just as before because the user wanted it to. Similarly with Union Pacific, so we manually adjusted the amount to 4%. We can always revert that back to the generated score if we wish by pressing this revert button, but at the moment it holds the 4% on which we chose previously. Same for BAT, we added it manually from our backup stocks, so again we have that in our portfolio. Just as before, we've got the backup table. We've also got, in this case because I removed stocks manually from our portfolio, I've got the Procter & Gamble and Home Depot stocks here, and you can see that these appeared in a number of ETFs, so if we wanted to add them back in we can simply press the add button. Otherwise what we have now is our new V2. Again at the top we have the same summary data. We've got information about how this compares to V1, so how the yield weighting has changed, the average score, any sector changes, and the total stocks in the portfolio. Again, sector breakdown and other things at the top as standard. Again, we can save this version as V2. We can confirm our save. So now this takes us back to our portfolio tab, and now we have V2. So we've got, again, on the face card, we've got the information around the current stocks. If I go back into view, I now have two versions against my portfolio, the V1. And again, if I want to view this version, I press view this version, it updates the table below, along with the stock data. And now I also have V2, which is being flagged as the current. So again, I press view this data, gives me the highlights of this portfolio, gives me the dividend calendar associated with this portfolio, just as we saw before, and then the stocks underneath. The best thing about this is that at the bottom it shows kind of the delta, so what's been removed, and then here you can see what may have been added or changed. So for example, Johnson & Johnson in this case was added in new. What we're also able to do on our forecast tab is to see projections of how this portfolio may look in the future and compare it to other potential portfolios. So this links to the portfolios I have in my portfolio tab. So this is our new portfolio and the version, so we can compare V1 to V2 for example, or just choose the latest. So I'll choose V2. We can set a started amount, how much we put into the portfolio per month, a time horizon, which obviously you can set to a custom amount if you wish. Some toggles here about reinvesting dividends and whether we want a simple or advanced model. I recommend for most users to use the simple model, but should you want to use advanced, there is some tips there's tips here about how to use that in earnest. And then it shows you, based on the portfolio we've got, how we can expect our portfolio to grow over time with the criteria as outlined above. We can also compare against a second scenario. So let's say I take my top 10 portfolio on version 3. So I can again use the same metrics starting at a certain amount with a monthly contribution. This time it gives me two outputs. So my new portfolio version, which we created today, and then my top 10. It shows what that looks like over time, and you can see here from the graph below which one, at least according to this scenario, is looking to be more lucrative over a 20-year period. So you may be asking, what do you actually do with this information? So you've got your portfolio, we're happy with it. How do I actually trade? So all trading is done outside of StockSmarty in your chosen investment engine. I like to use Trading 212, but you can use whatever you want, whichever one facilitates a portfolio. So you'd come onto your Trading 212, you'd scroll down, and you would go to create a pie. So you'd create a custom pie, and then what you do between StockSmarty and Trading 212 or your chosen trading platform, you would come down, you would find your stocks, United Health Group, and you'd put in an allocation, knowing that by the time you put in all your stocks and all your allocations, you should be at 100%. So, for example, if I type in United Health, I would add it to pie. I'll just do a couple here. So Coca-Cola, got 2 in my pie, Merck. Let's say I added all 32. Let's say I added all 32. I continue towards my pie. Again, obviously I've only got 3 in here, but I would then change the allocation depending on what I had in StockSmarty. So this would have been, obviously it's not going to work at the moment, but so this would be 4%, this would be 4%, this would be 4%. And we'd fill in all our stocks and our allocations until we have our pie. And then we can basically create the pie, invest in it on your trading platform. And then at the end of every month or every week or however frequent you want to do it, you would come back to StockSmarty, rebalance your portfolio, go back into your pie on your trading platform, and then tweak the percentages, add or remove the stocks, rebalance as you see fit. And that's essentially how it would work. Quick mention of the blog. So I'm publishing guides on dividend investing, ETF comparisons, how to spot dividend traps, how to use ISAs and SIPs as a UK investor, that kind of thing. Worth a look if you're a bit newer to all of this. This does work on mobile. It's more optimized for desktop, but you can go to this on your mobile screen and do exactly what we've done here, although, like I said, it is optimized more for a laptop screen. So that's StockSmarty. It's a tool I wish existed when I was running the messy spreadsheets for many years. Whether you're building a long-term income portfolio, looking for solid blue chip stocks, the major ETFs all agree on, or just want a smarter way to check the names you've been thinking about, give it a try. The free plan is generally free. Free for analysis on your first 30 days, no card required. It's StockSmarty.com, link in the description. Now, a quick ask, I'm planning to make follow-up videos where I run StockSmarty against specific ETF bundles, walk through what comes out and discuss the portfolios in detail. So if there's a particular combination you'd like me to cover, maybe US dividend aristocrats versus international high yield or something more niche, drop it in the comments and I'll pick up the most requested combination for the next video. Subscribe so you don't miss them. As always, I'm a solo founder. I read every comment and every email, and I'm building this for people like you. So cheers and happy investing.